IS Solutions, soon to be called D4T4 Solutions, provides analytics for companies and other organisations and has just reported full-year numbers, including a 187% rise in pre-tax profits before items and a 257% rise in dividend. Let's get some more now behind the numbers. We're talking now to Chief Executive Peter Kear. Peter, welcome.
Good morning.
First of all, explain exactly what it is you do.
Okay, IS Solutions are really focused on data and analytics. We have four areas to the business. We collect data using our Cerberus data collection engine, and that can be from mobile, it can be from web, it can be from ATM, and it can even now be from credit card transactions. We then manage that data, so that means we provide a suitable platform, whether it be cloud-based and whether it be a managed service or whether it be even appliance-based on customer premises. We then analyse that customer data. So we start to monetize that data for our customers, and we use various analytical methods, object modelling, etc., and really trying to find those nuggets of gold that the customers always are looking for in their data that they hold within their environments.
When talking about customers, what sort of names are we talking about here? Sectors or company specific, if we can?
Sectors really are primarily it's financial services, banking, and retail. So a number of our customers in the retail sector are people like Shop Direct Group, Saks Fifth Avenue, JD Williams. In the financial services sector, people like HSBC, Deutsche Bank, Commerce Bank.
Okay, so we've got some big names we know there, and you've got lots of recurring revenue within all your business model, haven't you? Just talk to us a little bit about the numbers and how you achieve this 180% rise in pre-tax profits before items.
Yeah, really it's come about in several ways. As I say, we've been focusing more and more on data and analytics for the last few years. We made an investment a number of years ago in a company called Cerberus, which is the data collection mechanism that we use, which has many patented pieces of software that we employ. And through that investment, we really, when we acquired it last year in January, we really moved into a very, very different phase of our development. In so much as Cerberus has been a very, very good acquisition for us, but it's really meant that we can now take all of our four business areas, and they're far more harmonious and in tune with what the market's looking for.
Are you happy with what you've got now, or do you see yourself adding more to the portfolio of businesses and offering that you give to your clients?
I think we've got a period now of bedding everything in and making sure we're in the right direction. Cerberus gives us the opportunity now to collect data from far more different touch points. And what you'll see over the coming year or so is us moving more and more into things like security and fraud. We're starting to collect data now from totally different touch points from our existing environment. So we're starting to be able to trace and monitor the behaviour of people within an intranet environment, maybe in the financial services sector.
You mentioned financial services. Obviously, as we know, sitting here on this Monday, 27th of June, at the back end of last week, we had what was ultimately a surprise to a lot of people, and we ended up with our relationship with the EU ultimately severed. When that's going to be remains to be seen. Banks took a really big hit. Financial services taking a big hit. Does this concern you at all? Is there a worry in the market for your business because of what's happened?
For us personally, no, I don't think there is, because more and more of our business is driven by compliance. It's not driven by a nice to have anymore. Our data collection and monetising customer data are really all part of a compliance play within the banking environments. Credit risk, analytics. It's all a must-have, not a nice-to-have.
And of course, you report in pounds, so the pound-euro relationship will obviously still remain, despite the fact we've got a big drop in the pound, which I guess possibly is potentially quite good news, I imagine, for you, the drop in the pound.
Yes, I mean, in fact, it can be quite good for us. In one way, when we're working in Europe, it gives us a more competitive environment, with the pound being slightly weaker. We do most of our business, some 60% of our business is based in dollars. And of course, with the pound weaker against the dollar, we're starting to see an improvement in our profit.
Of course, Mark Carney last November was talking about the fact that one concern about growth in this country was the fact that we had the strong sterling. So now we've got a weak sterling, but it's a lot weaker than I know a lot of people had expected. Just talk a little bit more about the relationship with companies in Europe. How do you see that changing?
I don't actually see our relationship changing that much with companies in Europe.
Are you happy then about the trade problems and issues that have been highlighted as a follow-through from Brexit?
No, I'm personally not that happy about the way things are going in that respect. But from a financial and from our business perspective, I think we're going to be mainly unaffected.
Yeah. What about other areas in which you operate? We talked a little bit about the financial services. What about other areas where you operate and your business is growing? Where do you see the big growth now for IS Solutions?
I think financial services will continue to be one of the larger growth areas for us. But as I said as well, retail services, understanding customer behaviour, being able to therefore draw on that historical customer behaviour and be able to offer them relevant, salient, dynamic, personalised offers is another area that we've been doing remarkably well with. And if you look at some of the shop direct increases in their sales and profits, largely driven by the fact, if you look again at their audited accounts, they say that most of this is driven by the use of technology in analytics and using our technology.
So you're helping boost their profit by the add-ons you give. Let me just take a look at the share price here, 117.6 pence. On this Monday morning, you've recovered some of the poise that you lost on Friday, along with the rest of the market. Absolutely. It has to be said. I was just looking here, FinCap had just put out a note reiterating their buy at 140 pence. A little bit away from that, but you have been higher than 140 pence earlier this year. Explain to investors what they're looking at here for an opportunity.
Okay. I think really from an investment opportunity, as you can see, I think we've been up to about 155 in the last few months. As you can see from our set of numbers, we're in a growth mode. And I can see no reason why a growth mode is going to change. So I think, obviously, from an investment perspective, I think there's quite a few stocks in the market at the moment that look like a very good investment play, and I think we're one of those.
Growth, but also income. Yes. What about this rise in dividend? Is that a one-off, or is it a part of a dividend strategy you're going to continue to offer?
We've always operated a progressive dividend policy. And realistically, looking at 3 to 4 times cover moving forward, that will continue to be the way we go.
So you're happy that you've got it's all continuation as a part of the business, you're able
Absolutely.
to continue to pay that. What's next 6, 8, 10, 12 months looking like?
At the moment, it's looking reasonably good. I think our business is starting to become slightly second half weighted, and I think that will continue. And from a perspective of analytics and data, really we're heading in the right direction. So I can't see any change. I think steady as she goes.
Okay, steady as she goes. Good way to end the interview. Peter, thanks indeed for joining us. Peter Kear is the Chief Executive of IS Solutions.